Do you have difficult clients? Well, if you do, you're not alone. But here are 3 simple tweaks that you can do to take the worst clients and make them the best ones. We have to understand the baseline of this is you need to understand customer profitability. I'm not talking about looking at your profit and loss statement and looking at the net income at the bottom of your profit and loss statement. I'm talking about understanding specifically that this client pays you this much money, and then these are all the expenses that you have specifically to providing the service to that client. A simple example, if we do tax returns, I have a cost for the tax software. I have a cost for my team members. We pay for a client portal that our clients use. So what's the client's portion of that expense? I'm looking at every single expense I can tie to that service level. Now, if I pay $50,000 for a tax software, obviously I'm not assigning $50,000 to that specific client. What I'm doing is I'm saying, well, if I have 10,000 clients, that means, whatever, I'm paying $50 per or $5 per client for the tax software. Okay. You have to know what that number is before these tweaks even make sense. Because if you don't know that, we don't even know if someone's a good client or bad client other than whether we enjoy working with them or not. And there's nothing wrong with filtering a client just based on that, but that's completely emotional. And at the end of the day, we do need to look at some of the logic because cash is king. A business needs to be profitable. And if you have clients that by serving them, you actually don't make any money, that means you're losing money just by having them as a client. And you can increase the profitability of your company just by firing that client. Years ago, when I was getting my Lean Six Sigma certification, one of the guys told a story about how he worked with the manufacturing company. He went in and identified customer profitability, and they had a specific client who was paying them $1 million a year. It was 20% of their revenue. And he did the math at all the costs associated with it, just like I went through, obviously more complicated, but he determined that they were spending $1.1 million a year servicing that client, even though they were only getting paid $1 million. Just by firing that client, they would increase their profitability by $100,000. That's the base level that we need to be coming into this conversation with. I don't know how we can determine that someone's a good client or a bad client if we don't know what the profitability is to the business. And that's not to say that there aren't certain clients who get through our, sales process where they're just not very good human beings. You definitely have permission to fire all those people. For all the other ones that, because the majority of people are good and reasonable, you have to understand the profitability. Now, here are the 3 tweaks. The first one is price tweak. If you have a client, they're enjoyable, but you're not making any money off of serving them, then you simply need to raise the price. You can't do that if you don't understand customer profitability. So that's the first thing, and that's the easiest one. Just looking at who are the clients I'm not making money on and which ones do I enjoy working with, I need to just simply raise their prices. Next tweak is, well, what happens if that client is like, I don't really want to pay the price increase? Okay, what we can do for you, client, is we can reduce the level of services that you're receiving from us so that we can keep your price at the same level. Because again, as a company, you have to be profitable with the client. So you've already identified that they need a tweak. You can't keep them if they're not willing to either accept a price increase or service level decrease, which reduces your cost to serve them. Therefore, the customer can become profitable. In these cases, I found it's best to just give the client the option, let them choose what are the services that they enjoy or find the most value in, and then the other ones, let's not offer those, and therefore we can potentially keep the price the same price point. I had a client years ago, let's call him Mark. There's just a time period where I felt like he was calling in all the time, interrupting my workflow, unscheduled appointments. I was getting kind of frustrated. But instead of just saying, well, Mark's a bad guy, which he isn't, I said, let's take my current emotional state out of this, because at that time in my life, I was overworked. I was burning out. I wasn't living the 3.3 rule. I hadn't discovered the science yet. I said, okay, well, let me just look at this logically. What is he paying me? What are the services I'm actually providing for him? And come to find out, it was a really great value exchange. For what he was actually using compared to what he was paying me, it worked. So I just said, hey, I looked at your service agreement. Here are a bunch of things that you're not actually paying for, but here are some things that you've asked me to do that aren't part of the current agreement. So what I'm going to do is I'm going to switch out these things that you want me to do, and I'm going to take off the ones that you're not using at all. And he's like, perfect. So his price stayed the same. We just kind of adjusted the services. So we did a service level tweak, and ended up being happy for me, happy for him. I'm no longer frustrated when he calls me because I know that he's paying a fair amount for what he's asking me to do for him. And that gets into the third tweak, which is what I call the boundary tweak. That establishes these boundaries. So you get this from me when you pay me this. These agreements establish boundaries, which is another way to say expectations. And then they give you the added benefit that when you do go above and beyond for the client, because you've established boundaries, they actually know that what you just did for them is special. So you get added benefit because now you have a better experience towards customer loyalty because they're like, wow, this guy is great. He went above and beyond and did something for me that he didn't have to do, which is very different than the scenario of a client who's like, hey, I'm paying you this. How come you're not doing all these other things for me? Well, because it's not in the agreement. Hopefully your sales process gives your potential clients all the options they can use from you so that they know what they're turning down when they choose whatever service level they're getting. Because that makes this conversation easier when it's like, well, remember when we were going over what you wanted and what we offer, you're like, I don't need all those things. Or you're simply saying, I don't want to pay for all those things, but that's cool. You don't want to pay for them. We're going to give you what you're going to pay for. That's where boundary tweak is really necessary, because then you can go back to the client and say, look, if those are the services that you want, that's great. This is the new price for that service. Because then again, you reiterate, we have an agreement. It establishes these boundaries. And now that you know what you really want after working with us, this is the new price. Well, I don't want to pay that new price. Okay, that's great. But then what you're currently paying is within these boundaries. Sometimes you can save a client because they just need to understand that they're not going to get their way. You understand what you need to receive in payment in order to have a profitable client. It actually doesn't always work out, and that's okay. If you've taken a client that you've realized we're not profitable on, and you've done these 3 tweaks, and they're still not going to be satisfied, then that is the sign that this is not a good client for your business and you need to fire them, which I totally understand can be nerve-wracking. Most people don't want to lose clients. Most people want the revenue. Anyone who you've discovered isn't a profitable client and you do these tweaks, I promise you that if you try to keep them, you are wasting more resources and losing money you can't see. Not every client's a good client for you, and that's totally fine. You don't need all the clients in the world. In fact, you probably need a very small percentage of them in order to have the lifestyle and life that you're looking for. Discover customer profitability first. Do the math. What are they paying? What do they cost you to deliver the service? Is that enough of a profit to justify keeping them as a client? If not, do one of those tweaks, either a price tweak, a service level tweak, or a boundary tweak, and you're going to get clients that agree to those changes. Not everyone will. If you can figure out a way to do that 100% success rate, again, you're going to make a lot of money teaching people how to do that. And so then for the others who aren't willing to accept those changes, you need to fire them. And I promise you, your business will thank you for it. Your team members will thank you for it, because those types of clients who are unwilling to pay for the value you're offering end up becoming a poison in the long run to your organization and for your team. So you're going to need to get rid of them. And honestly, this is one of the easiest ways to determine which clients you should be getting rid of. So I hope that helps. Remember, don't just have a great day, make it a great day.